Last time we talked about how well the Dallas apartment market is doing in the face of mounting supply volumes, and today we'll highlight another market showing some muscle amidst a big ramp up in new apartment supply. Welcome to Apartment Market Dynamics from MPF Research. I'm Jay Parsons with your Charlotte update. Charlotte's apartment market has been one of the hottest in the country over the past 3 years. In fact, when you look at some trough to current analysis that's going back these past 3 years, outside of the Bay Area and California, there are only 3 apartment markets in the country that have posted better revenue growth than Charlotte, and those are Denver, Austin, and Seattle. And the rebound came much faster and much stronger than pretty much everyone expected, and it's led to a major ramp up in apartment construction. The first wave is starting to complete, 3,124 units completed in the past year, expanding the Charlotte apartment base by 2.3%. That was the 5th biggest expansion rate in the country, and those numbers are only going to get bigger going forward. So how is the market responding to the increased supply volumes? So far at least, demand is almost keeping pace, so overall occupancy remains in very strong shape. Occupancy came in at 95.5%, one of the best rates seen here over the past couple of decades, but below the peak of 95.9% seen 1 year earlier. And looking at the large markets in the Southeast, Charlotte placed 4th for overall occupancy in a tie with Orlando, behind only Miami, Nashville, and Fort Lauderdale. Take a look at occupancy by year built. Strong throughout, all above 95%, except for that tiny segment built prior to 1970 when Charlotte was a much smaller dot on the map. That rate of 95.4% in the 2000 plus niche is especially encouraging, putting the top end of the market in good shape in advance of an even larger wave of supply on the way. The driver of strong demand has been, of course, the local economy. Jobs continue to come in at a healthy pace. Charlotte added 23,400 jobs in the year ending August 2013, expanding the employment base 2.7%, and that was one of the top growth rates in the Southeast region. So demand remains strong and occupancy remains tight, but rent growth levels are slipping, particularly at the top end of the market. Charlotte was a national leader for rent growth in much of 2011 and 2012, with year-over-year rent growth rates approaching 7%. But as of Q3 2013, rents were up a more modest 2.4%. However, that cool down was not widespread. It's really been concentrated at the top end of the market, which is, of course, positioning to compete with all of that new supply. You can see rents in that 2,000 plus niche climb just 0.9% year over year. And that compares to hikes of 3% in the 1990s product, 4% in units built in the 1980s, and 5% in the 1970s niche. So the middle and lower tiers of the market continue to perform very well. One exception to that general rule is Ballantyne. This is one of the few high-rent submarkets that, at least yet, is not getting much apartment construction. Rents in this southern submarket have been jumping for a while, and they're climbing at a brisk pace even still, up another 6.2% year over year through Q3, and occupancy is still in good shape at 95.4%, even though it did soften a bit over the past year. Now, the big question for Charlotte is, of course, sustainability. Can Charlotte maintain this kind of momentum, particularly on the occupancy side, within the face of so much more supply on the way? And that looks almost out of the question considering the volumes that are on the way. Charlotte is scheduled to add 7,000 units in the next year, more than double what it added in the previous 12 months, and that'll expand the apartment base by 5.5%, which is a huge number. So demand should be strong, but it's pretty much impossible for demand to keep pace with that kind of supply level. So we expect occupancy and rent growth levels to cool off again in the next 12 to 18 months, but the middle and lower ends of the market should continue to drive the overall performance. And once all this supply leases up and supply levels normalize, we do think the long-term outlook for Charlotte remains bright. And that wraps us up for Charlotte. So until next time, for Apartment Market Dynamics and MPF Research, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, NPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.